Okay guys, so in this video we'll talk about market structure. So what exactly is market structure? Well, market structure is just basically a way to determine where the price is heading towards. So are we heading towards an uptrend? Or are we heading towards a downtrend? So to determine if we are in an uptrend, what usually happens is that price comes and takes out the highs and respects the lows. So what do I mean by that? So as we can see right here, we have a high and there's a low. What price happens in a bullish trend is price comes up and takes out the high and creates a higher high. Then price comes back down and creates a higher low, and it just repeats, comes back up, takes out a higher high, and price comes down, creates a higher low. Now for a bearish trend, it's basically the same concept. Price comes down, creates a low, creates a lower high, creates a lower low, a lower high, lower low, lower high. What happens is the lows are now being taken out instead of the highs. So when we know that we're in a bullish trend, we look for buys. When we know that we're in a bearish trend, we look for sells. And that's why market structure helps us determine what type of trend exactly are we in. Now what happens when price comes and actually takes out the low right here? So what happens if price was not to come back up and take out this higher high, but instead comes down and takes out this low? So two things can happen. Either price just came down to take out this low and come back up higher, and this will still confirm that we're in a bullish trend, or what can happen is that there's a shift in the market. So price comes down, takes out the low, comes back up, but it does not come out and take the high. Instead it comes back down to take out this low right here. And that's a confirmation that we are now in a bearish trend. Okay guys, so let's look at some real life examples. As we can see here, we can tell that we are in a bearish trend. But how do we know we're in a bearish trend? Because, like I mentioned before, in a bearish market, the lows are taken out and the highs are respected. Meaning price will make lower lows and lower highs. So as we can see right here, we'll start off with this high. Price created a high and it came back down and took out this low. Price came down, created another low, came back up, created a high, and what happens is price doesn't come and take out this high. Price comes back down to take out this low. Price comes down, takes out this low, creates another low, comes back up, takes out the low again. So now what happens here? Another low is created. So what do you think will happen? You think that price will come back to these highs? Or would you look for sells thinking that price will come for these lows? And as we mentioned, we are in a bearish market, so what we would do is we would look for sells. And if you learn from the previous lesson what an order block is, we can actually see an order block right here. So what would be optimal at this point would be to sell. And what exactly happens? Price comes down and takes out, does it take out the low? Indeed, it takes out the low. Create another low right here, came back up and took out these lows. So that's an example of what market structure is. In the end, it's just a way to determine what exactly is the direction of price movement over time.